Good morning. Happy Monday, September 25th, the last Monday in September. If you remember, October is seasonally weak as well. So it's not like we're out of the woods. Here's Spy, on TrendSpider. I wrote a free Saturday newsletter thanks to TrendSpider. And the reason it was free was because they're offering listeners of this podcast, listeners and readers of the newsletter, they're offering a $250 price for the year on TrendSpider. And essentially, that's this middle tier, the Elite. This is what you need for my algorithm. Typically, you can skip it and buy it for $468. It's normally $780, but it is $250 for the year. You skip the 7-day free preview. You are charged immediately. If you want to take care of this offer, or to use it, I mean $250. Come on. For 1 year, it basically covers their operational costs, market data servers, etc. You're getting the platform where they just cover the cost for you. So that they're so sure that you're going to like it. They're giving you 1 year of this to do it. And a lot of people, even Brandon here on YouTube, he said, hey, I'm not going without it. Once you get this thing, set up and you get, what you get from me is you get my algorithms, the 65-minute, the 4-hour, you get the watch lists, you get the scanner. So everything that I do in this podcast, on this video, you can do by yourself. You can take a look at this stuff. So you can get alerts. You can set all that up. I don't use half of TrendSpider. And Brandon brought up a good point. Maybe what we should do is start with one feature per week or maybe even per month that we become experts on. But it's $250. How do you get it? Well, you can go to this newsletter and go to dailystockpick.substack.com. Click on this free Saturday newsletter, $250 for TrendSpider Elite for 1 year. And you go to this link right here, TrendSpider, typically $750. You can click on the picture. Use DSP 68. For any listener who took advantage of another TrendSpider offer and you're currently in a program, TrendSpider has told me that you can add 12 months to your current subscription if you chat with them and say you want code DSP68. I have not gotten feedback on this. I have a friend who wants to do it, so my email to my buddy over at TrendSpider is out. This offer ends September 30th. So if you're thinking about getting TrendSpider, hop on it. Again, $250. Make sure, A, you're interested in technical trading because this is not a plug-and-play kind of thing. You can absolutely use all of my imports and take a look at it. But understand, it is technical. There is no fundamental stuff. This is not a news situation. They do have news. They have other stuff. They have unusual options. It's a super, super robust platform. But you have to put in the work to do it. So understand that's the case. But definitely take a look at it. I'm selling that one. I'm also a partner, by the way, with Seeking Alpha. You can get Seeking Alpha, $50 coupon. It is normally, $239. You get it for $189 a year. I'll have some links down below. I'm just getting started on this. But one thing that I do know about Seeking Alpha is it's probably going to be pretty ingrained in my process now. I was doing this newsletter over the weekend. And the newsletter basically looked at the core portfolio, SPY, it looked at QQQ, and then I went into Apple, and then I went into, here, Apple versus SPY. This is a, 1 month return? 1 week return? Month to date. Month to date, Apple is down 7%, SPY is down 4.6%. So you can see Amazon here, but I will start using Seeking Alpha for more of this. Costco versus Walmart versus Target. Devon Energy versus the XLE. I am going to redo the core portfolio based on Seeking Alpha. What I realize is that core portfolio should come down from 35 stocks down to probably somewhere in the neighborhood of 20. And so if you want to keep track of that, go over to Savvy Trader, SAVVY trader.com. By the way, if any of these links you can get here on my link tree, linktr.ee/daily stock pick. But Savvy Trader, I do have this core portfolio here, and I don't change it much. I inserted Eli Lilly. I took out one. I forget which one I did, but I'm going to take out Target. Target should come out of this one. And it's clear to me Target should come out based on writing this newsletter. And again, the newsletter is more me looking at stocks, understanding which ones are hot, which ones are not. You can see Pepsi and Coke. To me, both of those, I have those because I drank cola. I always thought they were good investments. Well, turns out neither one of them's beating VOO. So I'll probably start trimming those two and moving them to VOO. Shopify and Tesla, Uber. I gave you all my thoughts here on this one. Any comments that you have on it, leave them down below. I don't know why the Costco one's not coming up. Costco, there's the stock. This is just a great stock. But you can take a look at that one. Again, if you want the offer, I like this thumbnail, by the way. I look buff on that thumbnail. That is artificial intelligence, just so you know. But the process is sign up for TrendSpider. When you get that, then just email me at dailystockpick3@gmail.com. I'll send you back the welcome letter. And the welcome letter includes links where you can import everything. And I am going to 100% promote my grift at this point. My grift, I signed up for a Patreon and I set up a Patreon. It took me like 5 minutes. I haven't even added a headline. I haven't done anything. But if you want a one-on-one session with me per month, $1,000. This is my grift. I will entertain you. I will go over stocks with you. I will watch your dogs do stuff on camera. It will be a Zoom meeting. I will not be doing car rides with anybody. But yeah, if anybody wants $1,000 a month, I'm here for you. Let's take a look at some of the stocks. Let's see. We're going to go to this. This is the heat map for Friday. You can see Tesla down 4.23. NVIDIA was up. Apple was up. Meta was up. You can see Microsoft down. We're in a period where it's a little funky right now. I just think that we're range bound. And I went over that in the newsletter. SPY over the last 15 years, this week is the worst performing in terms of win percentage per week. And how do you find that? Well, you can go into the seasonality of TrendSpider. And if we go, let's just go back. Let's go back to 1999. We'll go January. And we'll do week of the year. Go back to January. Look at the 39th week. I mean, the 39th week, the end of September, end of a quarter, it is just not a good week for stocks. So what are we doing? Well, if you believe this seasonal data, then maybe you want to short something like SQQQ. And part of the reason I say SQQQ is because there is a technical, we went below the 4,300 level on the S&P. So the S&P does 500 stocks. The NASDAQ QQQ does 100 stocks, and it's typically focused on technology. Let's go over to Seeking Alpha, and we'll go QQQ, and we'll do a charting analysis. We'll go to charting of QQQ, and let's take a look at the difference between that and the S&P. So we can go year to date. Look at that. Even if I get, let's select symbols. We'll take SPY because say you want to look at SQQQ, QQQ versus SPY. So the first thing that I would do, SQQQ, let's run it. Let's see. Let's run the algorithm on this one. SQQQ, you are a buy at 1863. You are currently at 2066. You're touching that 200-day. But let's take a look at QQQ on the daily, because if some of the tech traders are correct on a daily, if we go back here, they're saying the next support level, and you can see it clearly right here, is there's a volume gap there. Let's pull this to its lows. We're going to pull this right here, January. Let's just do this year. So where are people holding QQQ? They skipped this entire level. There's a gap down here. This is the daily. So if I look at where we are now, down to the 200-day, which is where people think that we might go, you're 7% down. If that's the next technical stop and QQQ winds up going down there, mind you, that is the VWAP as well for this year. So the volume weighted average price. If that's the case, you want to go with SQQQ. And remember, October is weak as well. So not only are we in the worst week of the stock market for 23 years, October is weak as well. So if you think we're going down there, SQQQ might be your play, because look at the difference. I mean, QQQ has returned 35%. Either this is going to come way up and meet that, or QQQ is going to come down and meet SPY. They're going to meet in the middle at some point in time. So look at the 1 year, look at the 3 year. I mean, QQQ at the 3 year level, they're about the same. At the 5 year level, QQQ beats it, doubles it. So I do think that there's an opportunity. SQQ might be your play, and it has been the play since $18.63 at the beginning of September, and you've got confirmation in it. So I want to make sure that's the case, that for the bears. That's it. If we look at by the way, I love Weeble's app. I can't show it on here, but I took some screen grabs that I'll put in the newsletter. The economic calendar came out. Costco, Accenture, and Nike are reporting this week. Those are the big top 3 companies that are reporting. Large cap companies on the major economic news. We've got durable goods coming out to Wednesday. We've got GDP growth, quarter over quarter, final coming out on Thursday. Core PCE price index coming out on Friday. Personal spending month over month and personal income coming out on Friday as well. I love Weeble's app. And if you want to sign up for Weeble, there's a link down below. You get free stocks. But let's talk about, what am I going to go to? 200-day. I wanted to talk about Costco. Costco's in the core portfolio. They report, I think it's tomorrow after the bell. Let's take a look on TrendSpider. It is September 26th, which is tomorrow, post-market. Now, this one in the algorithm has you in at 539. The algorithm, by the way, makes you 37% over 24 month. If you just bought and held the stock, which I do suggest you make 20%. 20% over 24 months, that's nothing to sneeze at. This is a quality stock. Go to a Costco parking lot on a Saturday. Look at how much people are buying. Look at how many members. They have started basically cracking down on members, making sure that when you walk in, you have to show your membership card. I like Costco. My parents are members. I am not. It doesn't make sense for me as a single person living alone to shop at Costco. I don't need 35 pounds of peanuts. So I don't need 14 pounds of tortilla chips. Riced cauliflower in a bag that would last me 4 years isn't going to last in my freezer. So I'm not a big fan of Costco for myself, but anybody that lives with somebody else, absolutely. That membership program is phenomenal. You save a ton of money just on freaking paper towels alone. Now, mind you, I use 4 rolls of paper towel a year. So I'm a bit of a minimalist. I believe in recycling and not using single-use stuff. So I wind up not using paper towels. The only thing that I could benefit from Costco is probably toilet paper. Honestly, probably use it, more than I eat a lot of dates. Let's just go over that. I eat a lot of dates. Somebody said I don't focus on nutrition. I focus on fiber like you would not believe. I am 53 years old. Fiber is a mainstay in my nutrition. So yeah, toilet paper is probably the only thing. They report The last earnings, you saw them rise. They were trading at just below 500. This was back in May. You had your ex-dividend date. I would expect some type of news in this. I've been saying this for the year, that a membership increase is coming. You can't continue to have increased cost, increased, reduction of margins, where they basically sell a lot of their goods for cost. The big thing is with Costco, are they going to raise the price of the hot dog? They ain't going to raise the price of the hot dog. Hell no, they ain't going to raise the price of the hot dog. They will lose money on that hot dog. You know what they're going to do? They're going to source a cheaper hot dog. They sell a ton of freaking hot dogs. I've never had a Costco hot dog. You know why? Might interfere with my fiber diet. Although maybe I should go over there. I tell you what, when I'm in New Jersey, when my parents are, I will take the Costanzas, as my parents are known, to, we'll go on an outing and I'll videotape it for you. We'll go get hot dogs so you guys can hear the complaining that goes on. What are we doing here? Why are we eating hot dogs? This is disgusting. Don't you know? I don't like meat. And then you get some turkey and she's fine. But yeah, we'll hear some complaining about that one. But yeah, Costco, I can't imagine that you're going to, 5 years from now, be upset at buying Costco. It's got a $247 billion market cap. Target price is $569. You're trading at $559. You're going to see a bunch of people come out probably when they report. Walmart had really good earnings. In fact, my weekly stock, his pick this week is Walmart. Walmart is a mainstay, and I do have it in the core portfolio, I believe. I closed that. I do have it. Yeah, it is in the core portfolio. It's right here in TrendSpider. I have it in the core portfolio. This is a stock that does really, really well because of their grocery business. The algorithm makes you 20% on this versus you make 13% over 2 years if you bought and held. I buy and hold it. I just buy and hold it. When it touches that 200-day, I want to buy it. Now, am I buying this week? You're buying into weakness. This is one of the first My Weekly stock picks. And if you're not subscribed to his newsletter, myweeklystock.substack.com. It's phenomenal. It really is. He's down 5% this year in an up year, which is crazy to me. He focuses on 30 stocks. The Dow is only made up of 30 stocks. But you can see 2022, he was up 13%. This is an outlier year. Hasn't had a lot of luck. And he's been hit by some big downturns on his picks. I don't expect this to be a big downturn. I expect Walmart. I think you can buy it. My preference would be to wait until my algorithm says to buy it. That's me personally. But remember, his process and his system is buy on Monday, sell on a Friday. And over the years, look, 2019, 2020, 2021, he gives you all of his performance. You can click on that and just look at the spreadsheets. I mean, where's his performance spreadsheet? He's got it up here. There's a link to it here. You can absolutely 100% look at it. He is completely transparent. And I like that. That's one of the things that I really like about him. But Costco reports, Walmart is the weekly stock pick. The other one that reports this week that is interesting, that I would not buy, but it's Nike. Nike suffers from the same thing that Target does, which is their management just hasn't managed inventories very well. Now, the algorithm loses you 6% on this versus losing 39% over 29 months. So again, the algorithm in TrendSpider works out. You do not have confirmation. You don't have anything that is telling me absolutely buy this other than the valuation of the company. But if their inventories are up, and they haven't been able to get rid of them. If China is weak, if China is weak, you're going to see the stock go lower. Honest to God. I mean, look at it. It was the October lows of 83. You could absolutely get back to that. This is not a better company than it was last year. Last year at this time, it's the same company, if not worse. They have an inventory problem. So if the consumer's getting weaker, these guys will get weaker. So Nike is one that I don't think you should buy. At some point, this becomes a buy, though. There was a good discussion I saw, a good debate, Nike versus Lululemon. And the debate was, are they the same company? But if we go over here to Seeking Alpha and we put in Nike, let's look at Nike's. We can look at the summary on Seeking Alpha of Nike. Wall Street, hold, buy. I mean, Wall Street analysts have it as a buy. If we go over to charting and we look at this against the S&P, 1 year, it's doing horribly. 3 years, it's doing horribly. 5 years, it's doing horribly. There's no reason to do this. Meanwhile, you put in a company that is doing well, Lulu. And let's look at this. I mean, 5 years, Lulu, incredible. 3 times the S&P. 3 years, you're looking at Lulu, it's underperformed the S&P, but it's outperformed, tripled Nike. 1 year, look at Lululemon, up 30%, doubled the S&P. Nike's down. Year to date, look at Lulu, 19% versus 12% on the S&P versus a loss of 24% in Nike. So the choice is clear. I just say you stay away from Nike. Let's see, valuation. Let's look at some of the PE stuff. Yeah. I mean, it's graded. The valuation is just too crazy. If we look at Nike, their PE is 28. Their forward PE is 20. That's expensive. Go to the footwear and accessories, and you look at this one. Let's rank this on PE. We're going to go PE. On Holding is the biggest one at 200. Nike's second at 28. On Holding is just one of those that they're at 200, and the reason they're at 200 because they're growing so much. So the stock is just there. And we'll look at On. There we go. On Holding. If you want to compare the two, On Holding's a rather new one. I've said that this is a $30 stock. It did hit that $36 mark. This, over 2 years, the algorithm loses you 2.1%. The actual stock performance, you're down 23%. That 200-day has just started moving negative. You had that death cross. I would stay out of this one for now, but trading this one does make sense because it is a big mover. Now, I want to talk about Netflix and Apple. We had a agreement with the Writers Guild, which means that the actors are probably going over. I will include this article in my newsletter. But Apple has the world's second most loyal customers. First most loyal customers, Netflix. What do I think you should buy? What was in my newsletter as one of the best buys right now? Netflix under 400. You do not have confirmation. The MACD is starting to cross. In my mind, I don't think you have to wait. I think you should do it. I am in this one at about 420, I believe. I will be buying more. I'm just being patient. Remember, we talked. This is the worst week of the stock market for SPY, for the S&P, going back 23 years. So I don't want to rush into something, but you've got to keep your eye on stuff. And that's where TrendSpider comes in. I can set up an alert for when this stock, create an alert at this time. So we want to say the EMA 9, when it crosses up, we want to say, we'll say sensitivity is, we'll do 75 cents. 10 days have passed. Let's see. We'll put in our note, Netflix cross up. Let's say breakthrough. We'll do that. Boom. Now, what do I get on the 4-hour EMA? When that breaks through that 9-day, boom, I get a text. That's why I like TrendSpider. I don't have to sit and watch charts. So this article tells me that remember, their last earnings, they said they will realize the earnings from the password crackdown in the next quarter. What were they trading at? 457. That kind of went down. You've lost it here because of the writer's strike and stuff. Writer's strike's over. The actor's strike will be resolved. You're going to see this one fill this gap back up to 470. So don't say I never gave you anything, because that's one. And if you want it to, you can tip me if you want. Amazon came out today. Amazon is investing $4 billion in Anthropic. I will include a news story from Seeking Alpha on this one, but I'll take a look at it. $4 billion in Anthropic, which is a competitor to ChatGPT. That's AI. I mean, these guys are going to be an AI player. They are already an AI player. Amazon, absolutely down here at the 200-day, start to buy once it has confirmation. And I got a question from a new listener. What is confirmation? Well, confirmation is different for every trader. For me, it revolves around that 9-day EMA. I will look at different time frames on charts. For instance, if you go up in a chart, say I go to weekly, you're going to see it's not touching that 200-day. It's below that 200-day. Right now, Amazon's using that 200-day at about 136, 140 as its resistance level. The 50-day has started to turn positive. So on a weekly, you absolutely would be bullish on Amazon. But the MACD is up and it's crossing down. Your RSI is at 54. It's in no man's land. So let's go down to a daily. If we go down to a daily, we can see it's not quite touching that 200-day. It's above the 200-day. Looks like it's run all the way since May. This is a daily. You covered that gap back down there. You've got some volume up here, level shelf, but big volume shelf down here at 104. So if we start coming down, the VWAP is about 114. And you can move this line in TrendSpider. This is your volume level line. If we take this back to October of last year, where they were trading at about 114 and they dipped down, you can see you got some volume here. The majority of people bought during this time and they're holding during this time. So as far as confirmation goes, that 9-day EMA is moving down. You are below it. The stock price is below it. Once it touches it or moves, just like I said with Netflix, once it moves above that, I'll start to look to add. I want to miss the first 10% of a run. I'd like to get the second 10% of a run. It's risk versus reward. That's as simple as I can make it. I will do a short on confirmation, probably on YouTube or something. But Amazon and me, I'm pounding the table on this one. It is expensive. If we go over here, let's look at FinViz. The PE is 102. Forward PE is 40. So they're going to continue to grow. It came out this weekend that they will start charging Prime members to avoid ad business. These guys are making a fortune off the ad business. These guys and Uber. That's an unrealized gain in the stock that you're going to see an enormous amount of ad revenue from those two companies, Amazon and Uber. You're starting to see them rival Google in the ad business, rival Meta. And Meta's just so cheap. I mean, when the ad business starts to come back, if the consumer is slowing down, the ad business is slowing down. Amazon and Google haven't seen it. Meta hasn't seen it. Meta's just printing money. So speaking of Meta, they will launch new chatbots with personalities this week. That's according to some report. They haven't confirmed it. But Meta under 300, grab it. Just grab it. You know, we talked about weekly charts, daily charts. This is a 4-hour chart. This is my algorithm. It got you out. Doesn't have confirmation. The MACD's right on the oscillator line. The RSI is at 45. Their earnings are coming up on October 25th. I like it. Under 300, I say get it. Now, understand from a long-term standpoint, look at this weekly. If we go back here, this was October lows of last year. You were at 100. You are at 300. That's triple your money. You haven't gotten the golden cross of the 50-day crossing up on the 200-day. That's why I say I think this one's going to 400. But the economy, the consumer, and the ad business needs to stay strong. So patience, just patience. But under $300, I think you could absolutely buy this one. Tinder, as a single person, I will tell you, this was interesting to me. Tinder is offering a $500 per month premier service. Who owns Tinder? It's Match. Match owns Tinder. MTCH is the symbol. This is one of, if you follow me on Savvy Trader, you know I follow Bradley Ferguson, Stock Nerd. This is one of his picks. He's gotten it. I don't like this stock. And the reason is, personally, I just have never paid for dating stuff. As a single person, I use the free apps. I use the free portion. That's been plenty for me. And yeah, I'm pretty antisocial. But yeah, I just haven't. It shocks me that people will pay $500 a month for a premier service like that. Whereas some people would give me a hassle about a $250 offer on TrendSpider. Okay, I will get anybody who's willing to pay $500 for Tinder per month. Pay the $250 for TrendSpider. Become a millionaire. You will never have a problem on Tinder. Flash that Lamborghini. Flash that big house. Have a nice home to take people back to. I don't have a nice home, but I'm a millionaire in hiding. But God, $500 a month, it shocked me. Now, if this takes off, yeah, you'll have a big response from that. Social requests. Gary, thanks for the deep dive into the core portfolio. If you didn't see it, it's a great newsletter. And Clark, thank you for that one. And on the pod on Saturday, once again, it was just what I needed when I needed it. I've done well in the past. Melly, I want to get back in. Would love to know what your thought is on a re-entry point, a new position. I've been looking at around 124 to buy and hold. Let's look at Melly. And if you don't know about Melly, this is Mercado Libre. Mercado Libre. So you white boy American doesn't know how to say it. I have no freaking idea. But this is one that has been traded. I've traded it before successfully because if you look at it, we're still in an upward trend long term. From a October of last year, July of last year, we're still in an upward trend. You're just getting the golden cross. I don't think this is a bad one to buy. Where do you buy it? That's kind of the issue. The algorithm makes you 5.4% versus if you bought and held this one for 2 years, you've lost 31%. So this one has been up and down. Again, it's the Amazon of Latin America. I think this is one that just is oversold right now. You look at that RSI at 25. You look at that MACD way down. You're crossing this 200-day. Now, 1,264 seems to be the 200-day on here. If we go to the daily, I'm moving from the 4-hour to the daily just to kind of get traditional. You can see that the 200-day is down at 1194. Now, their earnings are coming up on November 2nd, so you've got some time. I would be patient. You're just crossing this 50-day that's out there. Let's take this. Let's see where people are holding this from. Let's just take it back to this year. So people who bought this year, where are people holding? They're holding right about that 200-day between 1205 and 1226. If this is a long-term play, I would say you just get in now because, again, like I said, in a weekly, we're still in an upward trend. We haven't broken that upward trend. If we take this and look, we're just going to go back here to the June lows right there, and you need to touch 3 points. So we're going to touch the bottom 3 right there, and we're going to touch the top 3. The top 3 would be right there. So this channel, again, it's an upward trend. And you could take it from this point back here, 2021, where we were at the highs. But I think you're still in an upward trend. You're above the 200-day. So you've broken that line. Your 50-day is starting to move forward. And this is a weekly. And if you get that golden cross on the 50-day, you're going to continue in this channel. Now, you're towards the bottom of this channel. So if you break that channel, what I would do, this is the trade that I would take if you're trading it. I would say, hey, I'm going to buy here at 1282. If I touch this and break through that bottom channel at about, I'd say 1200, I'd get out. I mean, I would just get out because I do think that, I don't know enough about Latin America. I don't know enough about Melly. I mean, let's go over to Seeking Alpha. What do these people think about Melly? Let's see. If we type in Melly and the valuation is F, it's probably expensive. Let's see, valuation. Yeah. I mean, wow, it's kind of high. Let's look over at FinViz. I'm used to looking at FinViz. I still got to work Seeking Alpha into my stuff. But yeah, PE's at 86, forward PE at 44. It's up 51% year to date. Your average target price is $16.39. Your most recent is from September 1st. They moved it up to $16.50, and you're trading at $1,200. So understand that those guys are monkeys. They don't always know it. But here's the thing. Look at that PE right there of 86 to forward PE of 44. Let's take a look. I was just pounding the pavement on Amazon. The forward PE is 41. The PE is 103. So if you're buying the Amazon of Latin America, you're actually getting it at a cheaper price than Amazon here. So, and they're up about the same because these things trade similarly. Clark, I would say that's probably your best bet is to, if you're gonna trade it, use that the bottom portion of this. And what I'll do is I'll put this in the newsletter for you so you can kind of take a look at the chart too. Let's see. Hopefully you're subscribed to TrendSpider, but we're gonna take that one and we're gonna put this in the newsletter. Okay. Next, social. And yeah, this is what you can do. You can send it to your friends. You can say, hey, I got a killer stock. Scott from Facebook, thinking at these levels, it might be a good idea to dollar cost average AMD and Disney. Just don't go crazy. So I will say Disney. We'll start with Disney. I think Disney is similar to Target. I don't think that you touch Disney until their earnings. And I know Bradley Ferguson has started his position in earnings, and most traders will say, hey, don't wait for earnings. Don't trade around earnings. What I'm worried about is that Disney has more bad news. And November 7th is their earnings. I just wouldn't touch it. Again, we're in a weak period. Doesn't mean that it's not a great value. Let's take a look at a monthly chart. This is super, super long term. You're touching the 200-day. You are trading at levels right now that you were back in February of 2014. Your MACD has never been this low. So I want you to make sure that you're aware of this. This is a beaten up stock. So it does make sense long-term if you believe in the long-term viability of this. It does not mean that just because it's beaten up, you can buy it. Let's take a look, for instance, and I think I've shown this one before. GE. We'll go to a monthly look of GE because when I started investing in 1996, GE was the king. And it was probably 1986 was where I was. But it was the king. And you couldn't go wrong with GE. And take a look at it. I mean, you were at $9 here in 1981. And by the time you got to 2000, you were at 410. And GE was, they had a financial problem. It was they were pumped up way too much, and they basically got too big for their own good. That could be Disney. Well, if today is August 2000 of Disney, of GE in Disney, you're never going to recover. You'll never recover. Now, mind you, GE is now in an upward trend, and it has been going just gangbusters. Down here, November 2022, at the lows, you were at 60. You've almost doubled your money in less than a year. In less than a year in GE, you've almost doubled your money. Is it back? 200 days still moving negative. The 50 days just moved positive. This is a super long-term chart. This goes back way, way before. But in my mind, I think Disney could be the GE of now. The reason is because it's not super cheap. It is trading at 16 times its forward earnings. Its PE is currently 66. It just isn't super cheap. So I don't know that you necessarily go in expecting this one to rebound. Now, Iger is a great CEO. I think, I think they've gotten themselves in with the Fox deal. I mean, Rupert Murdoch looks like a freaking genius now because the Fox deal sent Disney into debt. ESPN is just bleeding money because they bet the farm with Charter. Charter said, hey, we don't want our customers to pay these high prices for the Disney bundle. So what did Disney do? They pulled their channels. So and Charter's called them on it. So I just think you be careful. That is one. Now, one that I don't think you necessarily need to be careful with is AMD. This is the other one that you brought up. AMD, in my opinion, is probably the best bet here. The reason is I do think that their chips are the second best in the industry, and they are making ground. NVIDIA is by far the best chips in the industry. NVIDIA is down at it's up 1.51%, but it's at 422. Remember, I sold that one at 505. But AMD, in my mind, is a good one. I hold this one. Now, I just recently bought this one at 109. This one got me in at 106. I waited a little bit, bought it at 109. Am I upset? No. I think long term, again, you had the death cross. What I would wait on this one is for some type of confirmation that we're moving up. This one is still expensive. Understand that the reason NVIDIA came down is because it's expensive. AMD is losing $25 million. They will probably turn a profit at some point in time. They are up 48% year to date. So you're just this is a daily chart, and you're just in the middle of this. So if we take a look at our algorithm, we don't have confirmation. We don't have a buy in the algorithm. The RSI is at 28. Their earnings are coming up October 31st, and NVIDIA is having a crazy good event in October to highlight their products. But let's take a look at seasonality of AMD. So weekly for the last 19 years, this is one of the worst weeks. So I'd probably wait. Next week's going to be a good week, but then you got a couple of bad weeks again. So I would probably meld my way in a little bit, but understand that you are in a weak time right now. And higher for longer hurts this. They're not making money. It's definitely one that you want to be careful of, but I do like it. Joe brought up a great one that really looks good. ALRP. This is a coal stock. And if you guys know, I'm big on energy for the fourth quarter. We've seen energy kind of rise. The oil prices are going up. ALRP is, oh God, come on. ALRP. What is it? Yeah, it is ALRP. No. ARLP? Yeah, ARLP. ARLP is it. Allied Resource Partner. I wrote it down wrong. ARLP. We'll put that in. ARLP. Boom, boom, boom. Oh, and great. The Republicans are threatening to oust Kevin McCarthy. So ALRP, this has been good. Look, that buy at 20, you're almost up 20% to 22. That buy at 20 is great. The buy back here in June was even better at 17. When this is a coal. Again, this is a coal one. So its PE is going to be low. It's crazy. That dividend right there at 12.84%. Year to date, you're up 7%. This one's not even at its 52-week, which is 25. And you know what? Its target price is 24. It's not covered. This is not covered. This article, this coal stock, is paying 13.7%. Is it worth it? This is from September 14th. On September 14th, we can go back to September 14th. This was trading at around 20. So, And so that 12% is based on today. I like this one. Joe brought this one up. I think it's really good. ALRP. You know what? I'm going to put this in our energy stock. In our energy stock list. Energy names to trade. Yes. We're going to put it in there. It has been updated. And you can, if you're in TrendSpider and you're part of my program, you will now have ARLP in your energy list. So scans, there weren't a lot. And recognize we're at a weak period. The market is open now. I think it's down a little bit. We can take a look in a little bit, but I think it's down. Let's see. This is usually 15 minutes delayed, but we'll see it. Home. Yeah. Advancing, declining's outweighing. Dow's down 0.24. I mean, you're just flat. I mean, it's just super flat. Look at this. SMA 50. You only have total above the SMA 50. Above 20% of the S&P 500 is above their 50-day. SMA 200, only 34% are above the 200-day. So it's just crazy week right now. BABA is the first one. Baba's the first cross up, 88.25. When I talk about cross up, it is a MACD cross up. This is based on my algorithm. I scan based on my algorithm. When I talk about a cross up, it is the algorithm entry point. And a cross up is based on, because my algorithm is based on the MACD has crossed up. If we look at this in TrendSpider, you can see the MACD has crossed the strike line. If you don't know what a MACD cross up is, Google on YouTube, watch a video. That's how I learned about it. But that's how you get in. Part of my algorithm is a MACD cross up. So Baba had one at 88. Is it moving? Maybe. Another one, HPQ had a cross up. This is one, took a look at this one in just before with some folks on YouTube. This one has a cross up. It is not above that 9-day. It is definitely a risky one. The thing you have to be aware of in HPQ is the greatest investor of all time has been selling this one, and I'm told he's selling it at a loss. Look at this. September 11th, he started selling 27 million, 48 million, 82 million, 45 million, 48 million, 35 million. He's selling around that $30 to $26 range. I would be interested to see if when he's done selling, we see a pop. I would wait for this to cross that 9-day. So HPQ is one. The third one, and there's only 4 in here, is SGEN, SGEN. SGEN is I think it's a technology company. Let's go over to FinViz and look, because I think it's a little bit extended. I'd be a little bit careful of this one. SGEN, they're not making money. They're losing 725. It's a biotechnology company. I knew it had something to do with technology, but it's a biotech. Be careful. I mean, the MACD is crossing up. Yes, it's a secondary cross up because the initial cross up was back here on the 23rd, and the algorithm has had you in since 195. You're at 214. It is an upward trending stock in a downward trending market. That's a good thing. Next one is another healthcare, TMO, Thermo Fisher. This one's interesting to me. I've traded this one before. It is definitely in a downturn. Again, you don't have confirmation, but it is in an oversold territory. This is part of the COVID hangover. It is one that is heavily tied to COVID. I don't think it's directly tied to COVID. In my mind, it's a much bigger company than COVID, but this one is pulling back towards its 200-day on this weekly. What I want to point out is that you go way back and you can't see it touching the 200-day. We're back here. The last time it touched the 200-day was 2012. So 11 years ago. It hasn't touched, even COVID didn't bring it down. Even the October lows of last year did not bring it down. It is currently down there. So again, I think this is more than COVID, but I think that valuation is starting to come in. If we go to TMO, and we look, the PE is 34. The forward PE is 20. So it's only got a 0.28% dividend. Year to date, it's down 8.73%. This, I think it's just a COVID hangover, and it stopped its run up. So I'd be careful of this one, but I do like it on a pullback to at least get back to 550, because if we go over here, the average target price is still 669. The latest coverage, Citigroup resumed coverage, buy. And that was September 6th, 625. So they see something that they like. You can load up on Morgan Stanley says about these 3 stocks. Tip Ranks has it. And I think, what are the 3 stocks? Homeat Aerospace. We can look at, if you want, I'll include this one in the newsletter. We'll put that one in there for Thermo Fisher. But that's the whole podcast for today. Now, remember, if you want the TrendSpider, if you see the charts and you like the charts, TrendSpider, $250 a year. It is exclusive to this channel, this newsletter. Sign up for the newsletter at dailystockpick.substack.com. If you don't want TrendSpider and you want something a little bit more fundamental, Seeking Alpha. I'll include a link to it. I'll put it up on my link tree as well. Seeking Alpha, it's $189 a year, normally $239. You get 50% off. I like this. I think this is absolutely worth $189 to me with what I've started to use it for. I have not gotten into the entire portion. There is a stock screener. There's an ETF screener. There is a top stocks pick. Find and compare. I love the investing groups. Find an investing group. Market data. You get stories. You can, take a look at this. This is what I like. Look at this. I mean, this is live real time for $189. You can see energy's up 4.42. What are the weak sectors? Well, utilities, 0.76. We talk about Walter all the time. Look at the 52-week range of these. So if you want something that's beaten down, consumer staples, XLP. You want something that's doing really well, XLC. It's up at, up close to its 52-week range. X Energy is up close to its 52-week range at 94. So I like seeking alpha. There's a lot that I need to go into in understanding this. But I think between those two, between TrendSpider, again, for $250, or seeking alpha at $189, I'd probably take the TrendSpider one. But at the normal price of TrendSpider, if you're not using charting, I think $189 is a solid play for seeking alpha. So I'll include those links down below. If you have any questions, hit me up. Again, everything's on Linktree. linktr.ee/daily stock pick. TrendSpider is right there for $250. What? Did I not? Oh, I didn't change it. I guess it's, it won't take me to that one. It'll take me here. It'll take you to the current offer. Join Webull today. Webull, get free stocks, daily newsletter. Visible if you're paying anything more than $30 a month for your phone service. I think it's back down to $20, $25. They play with this all the time. Get $20 off your, let's see, bring my phone. We're going to say, let's see, your phone is welcome. Get started. Wireless, $25 a month. Yeah. It's back down to $25 a month. I'm going to say iOS because who the freak, has God, if you have an Android, let's say Verizon's my current provider. It's as simple as this. Check your compatibility. Here are your two options. Continue with eSIM. There you go. Let's just look at the plans. You put in your eSIM of your phone. You get an eSIM. It's great. Here, $25 a month for the basic. That's it. If you want the extra, where you really don't have any difference between this and Verizon, it's $35 a freaking month. Yeah, and you get $20 off your first month with that link. So it's great. If you want a Tesla, sign up there. Savvy Trader, we talked about Savvy Trader. You can gift me with Venmo, PayPal, or Cash App down there. Everything else, you can see the socials. There's X. That's Twitter. If you want to follow me on Twitter, I am on Twitter. I'm a little bit active on Twitter. Not as much as a lot of people, but I am active. I retweet mostly a lot of the things that I see, like this guy talking to the announcers. That was great. Netflix is oversold. Like I said, Netflix is the greatest buy. Amazon posts worst weekly performance since October 22 after printing a hammer candle into the 52-week. ARKK down 15% since Cathie Wood claimed her fund was the new NASDAQ. 10 quality stocks near their 52-week lows. I like this thread. So follow me on Twitter. We've got a private Facebook group as well. If you want to join it, you just go in there. You can see private Facebook group right here. It'll show up. Let's close this. Let's close this. Let's close this. Instagram. I'm on there every now and then. But any questions, hit me up. linktr.ee/daily stock pick. Thanks, you guys. Talk to you.